August 15, 1971. President Richard Nixon sat in the Oval Office, looked into the camera, and in 15 minutes ended the global monetary system. Since 1944, the world ran on Bretton Woods, currencies tied to the dollar and the dollar tied to gold at $35 per ounce. Anyone could redeem dollars for gold, which made the dollar powerful because it was backed by something real. By the late 60s, the system was cracking. Vietnam War costs, Great Society spending, and rising deficits pushed the United States far beyond its gold supply. Other countries noticed. France under Charles de Gaulle demanded physical gold and shipped it back across the Atlantic. Britain, Germany, and Japan followed. Gold reserves fell fast. By August 1971, the United States had only about 10,000 metric tons left, and at the pace of redemptions, it could be drained in weeks. Nixon called an emergency meeting at Camp David with key advisors including Arthur Burns, John Connally, and Paul Volcker. They faced two choices: devalue the dollar or close the gold window entirely. Nixon chose to stop redemptions and reveal it only after markets closed. On August 15th, he announced the new economic policy with wage and price controls, tariffs, and one line that changed history: the temporary suspension of dollar convertibility into gold. Temporary was the word, but the window never reopened. Bretton Woods collapsed immediately. Currencies began floating. The dollar became backed only by the government's promise. The Smithsonian Agreement in December 1971 tried to reset exchange rates but lasted barely over a year. By March 1973, all major currencies floated freely and the gold standard was gone. Without a gold anchor, governments could print money without limits. The 1970s brought inflation, oil shocks, and stagflation. Volcker later admitted the world lost its monetary anchor. Nixon blamed speculators, but the deeper issue was simple. America printed more dollars than it had gold to redeem, and when the world realized it, everyone ran for the exit. Everything from modern inflation to debt cycles traces back to that night in 1971 when Nixon closed the gold window and turned the dollar into a promise that never returned to gold.